Hurricane Irma has been downgraded to a tropical storm as it heads northwest of the U.S. Florida may have escaped the worst of Irma, but the hurricane cleanup could take months. You combine that with the damage from Hurricane Harvey, and the economic impact is expected to top $150 billion. To talk more about that impact that it could have on real estate markets in those states, we're joined by Hessam Nadji, who's CEO of Marcus & Millichap. He joins us live from Los Angeles this morning. Great to have you on. Let's start over in Florida because there's a lot of folks out there who are just assessing the damage. Sure, certainly they escaped the worst, but there's still a lot of cleanup on the ground. What are you hearing in terms of the assessment on the ground?
Thanks for having me on the program. Well, the word that comes to mind on this particular day is resiliency. We have a very large team throughout Florida. We've been in touch with all of them. Thank goodness everybody's been very safe and uninjured. What they're reporting, though, is a pretty dramatic effect in terms of business disruption, life disruption, and so on. And the word resilience really comes to mind, not just because of the two storms that we've experienced, but also on the anniversary of 9/11. It's really important to keep in mind that the U.S. economy has had great momentum right before these tragedies that we've seen in the last couple of weeks. And most importantly, the affected areas, both Florida and Houston, had very solid economic fundamentals prior to the event, both in terms of job creation, the housing market, population growth, and so on. We're expecting a pretty significant short-term effect in terms of the numbers being very skewed for the next couple of months, and the recovery effect really taking several months before we can get a real clean reading on it. But what's really in the favor of a pretty optimistic scenario for recovery, particularly in Florida, is the economic resilience that we've seen over the past, I would say, 2.5 years or so. Florida was kind of late to enter into the recovery, but over the past couple of years, it's shown very solid numbers on the job front and on the housing front. We are a little bit concerned about the insurance coverage for a lot of the homes. On the commercial real estate side of the equation, for the most part, as you mentioned, it looks like the worst of it was avoided, thank goodness. But there's still going to be some issues related to insurance and the timing of recovery.
Let me ask you this. I mean, you talk about these two states. I mean, Houston certainly had one of the healthiest real estate markets in the U.S. prior to Hurricane Harvey hitting there. You're talking about the impact there on homes as well as commercial real estate. Whenever we see these kind of natural disasters, there is a tendency to see a construction boom in the longer term. And yet already over in Houston, we're hearing about labor shortages. I mean, how do you think that's likely to hamper some of the growth that could come later?
Sure. On an immediate basis, we're seeing tremendous demand for rental apartments and hotels because of displaced residents that cannot return to their homes. We're going to see a shortage of rental stock of available apartments, particularly in Houston. And it's ironic because Houston has actually been one of the most active markets in constructing new apartments. And now it's going to have a shortage of supply for the foreseeable future.
Hessam, we appreciate your insights this morning.